Shutdown drags on. Increasingly, investors are seeking safety. We told you about the big gains for gold. Many are buying Bitcoin. Where should bonds fit into the equation? Where should fixed income in general fit into the equation? Well, joining us now with his fixed income outlook for the fourth quarter is Jeff Rosenberg, portfolio manager for BlackRock's systematic multi-strategy funds. Great to have you here on set.
Great to be here. Thanks.
Let's start right there. You just put out your Q4 outlook. What are your takeaways?
Yeah, the key takeaways here, if you put it in one word, it's about disruption. And we talk a lot about that in the equity world and technology and disruption. But what you're seeing in the fixed income world, particularly globally, is, a couple key points. But the first one is desynchronization of global economies. And that creates opportunities for investors to think not just about the U.S. fixed income market, but about global opportunities as you're seeing central banks do different things across different inflation.
So what do you like in a desynchronized world?
So in a desynchronized world, what's happening right now is kind of Europe is getting to the end of its cutting cycle. The U.S. is in the middle of its cutting cycle. So it kind of brings back a bit of investment here at the U.S. market. I think the big theme globally, as well as for the U.S., is where on the curve does that look attractive? And we've been emphasizing more of kind of the short to the middle end, and that still is our focus. But the back end over the course of the year has improved in terms of its valuations. We had a big steepening move, relatively higher yields in the long end than the short end. So it means adding a bit back in that part of the portfolio as well.
Hey, Jeff, it's John. Tell us about how investors should be making decisions. You talk in this report about alternative data, which I guess is especially important during this government shutdown. And as we've had these major revisions to jobs reports, even when we are getting them, what's the sort of data that you're using, that investors should be using to gauge how they should invest in fixed income?
Yeah, it's a great question, and invest in fixed income as well as ascertain, the outlook for the macro environment. And with the shutdown, we've all had to move towards alternative data. I highlight in our section of this piece just, the success we've had in using alternative labor market data. And that's been a big focus because of the payroll revisions and obviously now the shutdown. And, technology change has increased our ability to ascertain the labor markets. You've got more job posting data. You've got more wage data. We highlight that the wage data has been really effective. And right now, what it's kind of telling you is it's validating that slowdown that we've seen that's kind of put in to the market pricing the expectations that the Fed's going to continue to ease here.
You guys seem to like municipal bonds?
Yeah, you see a really attractive yield spread. When I talk about the curve, or when Pat Haskell, the head of our group here, talks in this piece about kind of the yield premium that you see in moving out the curve. In treasuries, it's okay. It's steepened, and we like that a little bit. It's even better in municipals, and that's something that we're highlighting as an opportunity for investors.
I realize the dollar's been strengthening against other currencies in recent days, but in general this year, it has weakened a fair amount. We were just talking about treasuries and what's happening in the yield curve. How much of that is reflected in what we're seeing happen in the gold market right now?
It's a big part. I mean, the overall weakening dollar, the seeking out of alternative forms of safe havens. We're talking about fixed income. Typically, you think about treasuries in the front end of the curve. There's a lot of uncertainty around the back end of the curve because of fiscal policy, because of the debt and the deficits. And so this kind of seeking out alternative forms of stores of value, gold's been a huge beneficiary of that. And the bigger factor as well here, kind of sneakily, is inflation hasn't really come down while the expectations and the reality of Fed rate cuts have come down. What does that mean? It means your real interest rates have come down. And that typically is a big support for gold prices when the alternative real income out of fixed income is going down. So that's another thing we're seeing behind gold price.